Hey everyone, thanks for joining us today. My name is Denis Kalishkin. I'm the principal at I2BL Global Ventures, and this is a series of webinars for entrepreneurs in emerging countries. Today we'll be discussing the topic of FinTech and how it evolves in various countries and what barriers startups face when they play in this field, and in general about trends. And we also cover a little bit of, how the financial system in various countries look like, and what should you account for when you're entering the new market for you, because obviously finances is a blood for any business, regardless doing your FinTech or classical business. And to support this discussion today, I host my colleague from FinSight Ventures, Pavel. He's an expert in the field and looked across the various geographies how this FinTech sector evolves. So Pavel, thank you for joining us today. Please tell us a couple of words about yourself, about your experience, so that our guests understood your profile.
So thank you, Denis. So I am associate with the FinSight Ventures, and we are FinTech-focused fund. We've been investing since 2002-2003, and among our most well-known FinTech investments, Learning Club that IPO'd in 2014. We also invested in a couple of companies mostly we invest in the United States, but we also have a couple of companies in China, in Europe, in Russia. And recently we decided to switch our focus to expand more geographies. So we spent a lot of time exploring Latin America and India last year. So eventually we opened an office in India. And we're looking for new investment opportunities in FinTech in India, but obviously we're not forgetting about the United States.
Yeah, okay. So FinTech, it's quite a word, a lot of buzz around it, and a lot of unicorns, a lot of deals happening in the sector. Maybe you give us a helicopter view of how the sector looks in general. What are the most interesting verticals? What are the most interesting business models? And by the way, what are the models which disappointed investors? Because
Yeah, obviously. Okay. So I think the FinTech hype started about 5 or 6 years ago. And at that time, everyone was speaking about unbundling of financial services. So the thesis was quite simple. So if traditional institutions are struggling to create some modern products, so why don't tech companies pick a particular product and build it in a more fancy manner? And this is how most of the current FinTech unicorns appeared. So to give you for a couple of examples, like TransferWise, they disrupted Western Union. Stripe disrupted traditional legacy acquiring. So Robinhood disrupted ChargeSwap. And today, we understand that financial institutions are not just one particular product, it's a set of products. And if you want to become truly big, you have to become one of them as well. So this is why Robinhood, which I mentioned before, they started offering savings product. Square offered lending product for their small businesses, and etc. etc. So on top of that, the more mature the company becomes, the more it cares about the margin. And we see another trend of rebundling. So FinTech-focused companies, they are becoming truly institutions in the way we understand it. So this is how N26, which is a challenger bank in Europe, they acquired banking license. Learning Club acquired a small bank in order to obtain a license on their own. And yeah, Lemonade, they acquired, actually not just Lemonade and Hippo Insurance, they acquired both insurance companies in the United States. And this is a very brief high-level view of what's happening in FinTech today. From a model standpoint, I mean, we see an increasing demand for platform solutions that allow software companies to become FinTechs on their own. And it's not just about the APIs or open bank. I mean, I can give you a couple examples. For instance, there is a company called Market, which is actually rumoredly will become public soon. So they developed a software that allows very flexibly issue cards. So it basically allows any business to issue cards, like delivery companies, marketplaces, etc. Another company, Phoenix. So it's think of it as acquiring company, but they develop software that allows any SaaS business to become an acquiring business. So instead of paying few basis points to acquiring processor, so you actually become a payment facilitator on your own, and you earn those basis points. Yeah, another interesting model is the salary advances. So people traditionally used payday loans, and we actually, as a fund, we also have a portfolio company which focuses on payday loans. But most of the people, they use payday loans to finance their out-of-pocket expenses, and this is common everywhere, like in the United States, in Russia, yeah, everywhere. So at the same time, we understand that people use payday loans just because think of it like you earn some money every day while you're on the job, and why don't you receive money every day and you only receive it once or a couple of times a month? And the only answer to that is the legacy payroll systems that are built and that are used by the current businesses. So there is a bunch of companies that solve this problem. To give you a few examples, it's Daily Pay in the United States, or Earning. They use slightly different models, but trying to solve the same problem. And there is a company called Market Wage in the United Kingdom. And from a perspective of models that disappointed, I think, well, we started exploring FinTech vertical from Lending Club, but from my personal opinion, if you look at the current valuation of those public P2P lenders, you'll see that the market does not value them highly. And the major pain is the cost of capital. So, and actually, this is true not just with the P2P lending. It's true about every FinTech focusing on lending. The major advantage of any bank is the ability to obtain financing cheaply. So if you're a lending club, which is P2P, you cannot compete with a bank by cost of capital, and this is negatively affect the way your product looks like. So basically, your interest rate that you charge your clients is bigger than bank. Mm-hmm. Yeah, and maybe another example that disappointed me personally is the Challenger Bank, because I know we've seen a lot of them evolve in the past, but if you look at the bank from accounting perspective, the bank is nothing but a combination of deposits which are cost generating, and credit portfolio which is income generating. And many neobanks, they only focus on prepaid products. By this, it means that they only focus on cost generating. So they don't care about income generation. And this is why they're struggling with their unit economics. There is a way to solve this problem, but I just know that many neobanks, they only focus on prepaid products.
Yeah, and any particular reason they do that? Does it involve any regulation, like acquiring a specific term of specific license or something?
There are basically two reasons. The first is the regulation. If you acquire deposits, in a prepaid business, which most of the which is the case with most of the new banks, you cannot do anything with that money. Though those money are kept in secure account, and most of those new banks, they operate with the electronic money license. And in order to give that money to your clients as a loan, you have to obtain a license, right? So license is the main barrier. And
not only license, I guess you need to allocate significant capital in order to comply with the regulation, right? Like Basel.
I mean, capital requirements is a requirement of the license.
Yeah, understood.
Yeah.
Yeah. No. Okay. So and if we speak about the difference between how fintech evolves in developed countries versus emerging countries, what would be the difference? Like if we speak about India or Latin America or Africa, because what I see, like from my point of view, that in emerging countries there are a lot of good financial services because of the lack of the legacy system, and but on the other hand, it's actually those services emerge from the shortages, like the shortage of ATMs or shortage of bank accounts of the population. So please share with us your vision on the difference.
Yeah. So I think the main difference between developed and emerging markets is the stage the fintech is currently today. Well, I mean, it sounds very obviously, but when it comes to developed countries, I think the fintech there just goes in line with the all other innovation trends. So, I mean, there is no need for new Facebook because there is already one that exists, right? And the same with fintechs. We saw a handful of successful companies in B2C space previous years. And here comes the problems. I mean, we as a consumers, we consume very modern financial products. I mean, I'm not sure where our listeners from, but I mean, you can use Chime to use your online banking. You can use Robinhood to trade. You can use whatever you want, and most of the products can be very, very modern. But you as a worker, when you go to your office, you face a very frustrating legacy business bank account, legacy accounting systems, and so on and so on. So in developed countries, I think the fintech is moving from B2C to B2B side, and this is in line with the the so-called global trend of consumerization of the enterprise software. This is what I believe in. In terms of emerging markets, again, this is different depending on geography.
Could you give a couple of examples?
Yeah, I think. Look, there is the main advantage of the emerging market is that it is able to copycat the successful models that were existing elsewhere. And if we take a look, for instance, Latin America, we know from the history of PayPal that PayPal evolved in conjunction with eBay, right? And what we see in Latin America now, there is a company called Mercado Libre, which is Amazon of Latin America. And there is a payment subsidiary of that called Mercado Pago. And you see that the story is very similar. And actually, PayPal invested almost $1 billion last year to Mercado Pago. And this is what I call the advantage of emerging market. So they replicate the model there. And actually, the model that was happening a decade ago in the United States. And in other countries, take for instance India, we see that they stages we've seen in the United States. So there is a government initiative called UPI, which is Unified Payment Interface. and think of it as a fast payment system in Russia, right? And now every consumer can pay without using a credit or debit card, so it's easily integrated, and every business can actually turn to be a payment product on itself. People don't even need a piece of plastic to pay today. So this is a cool example of how a country that is like in development can leapfrog and develop the models that would probably exist or will appear in the United States in in forthcoming future.
And if you speak about what pushes FinTech in general, I mean, and is there any difference? Like, for example, in the United States, maybe some regulation was put in place in the last years, or something something else happening, which forces those FinTech services to adopt modern technologies. So why is now like
the most favorable question from every investor? So yeah, every why is now is different depending on the geo. But if you take a look at the United States, you'll see that the regulation in the United States is very fragmented, right? And this is why PSD2 appeared in Europe, not in the United States. I'm not sure if everyone knows what is PSD2, but in a couple of words, it's a regulation that allows you to delegate any third-party provider, which can be software or whatever, to pay or to look up for your balance in your bank account. And you don't need to ask your bank to do that, because the bank should do that by default. And if we see what happened in the United States, we know that the fragmentation of the regulation did not allow such products to exist there. And this is why actually Plate came into space and they solved this problem. And I wouldn't say that regulation is one of the forces that drive innovation, but it's not always the case. And sometimes lack of regulation is the force that drives innovation itself. And I already mentioned PSD2, already mentioned UPI from India. And actually another interesting initiative in India is introduction of a unified ID, which is Aadhaar. So basically you digitized 1.3 billion population, which is, I think, a very, very cool. Yeah, and so I also mentioned the trend of the consumerization. And I think that obviously emerging markets, they have some space for B2C innovation. Still, they still have some space there. But if you look at the United States, I think the most of the innovation would be in the B2B space, because you ask why now? Because you as a consumer, you use modern products, and you're required to use the same products as a worker, right?
So actually, I see the same trend happening not only in FinTech, but also in other vertical, including manufacturing, for example. When a worker comes to the place and say, "Hey, I can use an app to hail a taxi. Why should be like purchasing a flat? Why should be that complicated? And or why should my logistic be like this pain in the ass? My delivery." Yeah, so yeah, that's one of the trends in general. Yeah, and another question to you is what I see, and many bank CEOs stated boldly or implied that FinTech is playing. Classic banks and financial services, they compete now with IT services like Google, Amazon, or with telecom operators. So so the barrier actually eliminates slightly. Could you also give your perspective on that?
Yeah, sure. So I think the idea, the first reason why the border side eliminating is that the market is actually limited. So banks can no further grow without entering new verticals. And this is true with telcos as well. So they cannot grow because your ARPU will not grow and your costs, so actually your margin is becoming lower and lower, especially in the COVID days when everyone is using different software for remote worker. So, I mean, this is probably the apparent way to survive in this world, and this is why they want to enter new verticals, which is, I mean, financial is one of the most obvious, I think, especially for telcos, because telecoms they're very similar to financial institutions. And
but I also do see another trend, like those IT companies attacking and starting their financial services. So in a way, it looks like they force banks to compete with them.
yeah, I mean, internet consumer products, they know a lot about their users. They know much more than your bank know about you. I mean, what does bank knows? It knows where you transact, what you buy. It probably also knows what kind of operating system do you use, whether it is iOS or Android. And it also knows where do you pay, right? The geography. But when it comes to Google or Apple, they know much more about you. They also know what you buy. They know so much more data about your behavior, so they are able to score you as a lender more efficiently than banks do. And what is more important, they have a very, very large user base. It can be just monetized with financial products. And for Apple to acquire you as a financial product consumer, it is much more cheaper than for bank to acquire you as a mortgage, consumer or whatever.
Mm-hmm. Mm-hmm. Okay. So there is a provocative question, like, do you believe that FinTech is not that sexy as it was maybe 5 years ago? And if like there is any differentiation in geographies, could you also shed some light on that?
Well, I think it depends what you mean by sexy. First of all, I think, here it comes the consumerization trend as well. Yes, B2C FinTech, I think, is kind of mature, and most of the innovation in the future will be from B2B space. And does it mean that B2B space is more boring than B2C? I would suggest just to look at the multiples of the public companies, and we'll see what is more sexy or not. So B2B product, you can be traded at 50 or 70 multiple to sales. Isn't it sexy? No, I definitely don't believe that FinTech is not sexy anymore. So I think this space, especially small businesses, can be even more, dramatically increase the penetration of usage of financial products. And if you look at the way businesses transact today, which is much more outdated than the consumers, and the business opportunity there is even bigger. This is what comes to developed countries. In emerging markets, I think, the beauty is there that those countries experiencing the same what was happening in the United States or Europe a decade ago. So the electronic commerce is booming, and all the side products are developing there. So I think there is a lot of space there for B2C as well. And the beauty is that we know how to build the business.
Mm-hmm.
Probably about India is slightly different. So they cannot over democratize, but the access to financial products there is more democratized than in any other country.
Mm-hmm. So I guess there are some entrepreneurs listening us today from emerging countries, like for example in Eastern Europe or some other parts of the world, and they would they are thinking about exploring a new geography or maybe starting from scratch their business in another geography. So maybe could you give some pieces of advice for those who are thinking about choosing a new market? What should they account for? And maybe like so to find the right balance of competition, of the local trends, of the regulation, or of the market specifics. So what should they keep in mind when they are choosing their geographies to roll out the business?
Do you mean fintech businesses or
Yeah,
other businesses?
first of all, fintech businesses.
So yeah, I mean, my most generic advice would be to think of your product as not as a financial product first of all. So being a fintech, you're building not just fancy interface or product from a technology perspective. First of all, it is a financial product, and this is why you have to build a product in line with the macro in your country and in line with the regulation in the country. So think of it whether your product is relevant there. So what are the interest rates there? What is the penetration of cards or any other digital payments there? And why do people have to use your product? Is it relevant? Will it be relevant in the future when the macro will change? So this is the most important advice that I would give to fintech companies.
And if you speak about if we're speaking about any business in general, because I don't know, there is we know that there are a lot of underbanked people in, for example, in Latin America. It means that you can struggle like taking payments, online payments from your B2C clients, for example. So maybe any specifics you need to account, or in Brazil, it's quite a challenge to get out the money out of the country. So maybe some specifics on financial sector in general, if you would like to start business somewhere.
Well, I think the problem of taking money out of the country comes only when you earn some revenue there. Before that, you have a problem of how to accept payments there. So the first advice or the first problem that may be faced there is that, I mean, you have to ensure that.
Sorry, I don't hear you. Perhaps some bad connectivity.
America or India, and you'll chargebacks, you'll face rejections, etc. So I don't want to advertise anyone, but there is a plenty of solutions that can help you with that. So they aggregate the ways of payments which are relevant in every geography and allow you to accept payments there in a way that people used to. So this is, I think, well, as an example is a company called Rapid, which is UK and Israeli-based company. So they can help you with pay-ins and payouts in every country, almost every country.
Mm-hmm. Okay, thank you. So the theme of the topic for today's discussion is like a lot of regulation, even more than innovation in fintech. So maybe let's talk about some regulation issues which startups typically face, and maybe in fintech space, and fail sometimes because of those issues. So could you give some examples or something to keep in mind?
I mean, the role of a central bank of any country is to assure that citizens, they consume safe products, and this is why they create those barriers. So this is not because they're bad or so. This is because this is how the finance works. And but anyway, creating any artificial limitations negatively impact the competition. And yes, I mean, you cannot change the regulation, so you either take it or not. And as I said, some countries, they democratized access to financial infrastructure, like India or European Union. Not. I mean, Mexico probably. I'm not sure if they launched their fintech law, but anyway, some countries do that. Yeah, and acquiring own license can be very expensive, and I think the way every fintech company should be developed is that they should bet on obtaining own license at some point, and so they should include building their own infrastructure, not infrastructure, sorry, regulation layer at some point in their roadmap. So this is okay when you're at the seed stage and you can partner with a bank in order to offer you a prepaid product. But you must understand that in order to become truly big, you have to build your own regulation layer.
Mm-hmm.
I mean, become more rich.
Okay. Another vibrant question which entrepreneurs ask is, how did COVID affect the fintech sector in general, and what should we account for in this instance?
Well, this is a very simple question. I mean, what are the outcomes for the general economy? So electronic commerce is booming, and this is why online payments is booming as well. Household incomes dropped, and we said that lending businesses stuck in defaults. And actually, if you look at lending club, the revenue, their originations dropped 90%. And what else? Interest rates dropped. So people, even children, they installed Robinhood investing app. So I mean, there are many of examples. Some of them benefited from COVID, some of them did not. Yeah, and again, I mean, I will probably repeat it, but at this stage, fintech entrepreneurs should create financial products which are relevant these days. And you won't experience any issues if you do so. And for those that realize that their product is not relevant during COVID, you basically have three ways. You either close the business, you either wait for economy recovery in case if you have a runway, or you pivot. So this is sad but true.
Mm-hmm. You also mentioned even a kid could install Robinhood and start trading stocks, and an interesting topic to discuss. So if you look at some companies like modern, I wouldn't point to exact names, but if you look at their stock, it's unreasonably high, and there is a notion that like this the millennial the Generation Z tradement behavior affects these unreasonably high valuations. Maybe could you elaborate on some, I don't know, behavioral changes in general in financial markets, and so something interesting happening in general?
Yeah, I mean, there is a lot of rumors that Robinhood is driving the financial markets today, but I personally don't believe in that. If you, I mean, you can simply look at what is the average balance on the brokerage account in Robinhood versus Charles Schwab or whatever. You'll see that this is probably 2,000 or 3,000 USD versus hundreds of thousands USDs. So there is a lot of hype there, but I don't believe that people, I mean, the stocks are driving just because of the Robinhood users. But there's definitely some hype there. Why the stocks boomed? I think that basically, I mean, there is no single question, single answer to this question. By many reasons, and many people would also say that there is a bubble, another bubble. I would say, which is also not true. I think first of all, the main reason is that there is inflation in the financial sector, right? There is an excess of liquidity in the markets, and there is a lack of instruments you can put your money in. So you won't put your money to the bonds with the negative interest rates, right? You probably would go to the equities. And during any crisis, many investors also flow in their capital of the emerging markets, and they also go to U.S. equities. So this is why there is excessive liquidity in the United States stocks, and it's not just tech stocks that boomed after COVID. If you look at the news background and the market behavior, you would actually ask many questions. Why is it happening? I mean, I every day look at stocks, and when I see that the market, well, not today, but very recently, when the market was growing, I was like, is there any good news regarding COVID or whatever? No, the only news was bad, but the market grew. And this is all about excessive liquidity. And another question, interesting question, is why the B2B SaaS businesses are trading. So I think also, I mean, there's inflation, but think of it as .com bubble was really bubble because most of the companies were traded on expectations that someday they will become big enough, right? They were traded with the revenues of 30, 40 million with the multiples of 20, 30-ish. But they were small. In fact, they were small, and they were trading under anticipation of future growth. And these days, we see that the technology stocks, I mean, FinTech, whatever, any technology is actually the main driver of the global GDP. And this is why I don't think that it is a bubble.
Mm-hmm. Mm-hmm. Okay. So one more question. This time about the barriers for entrepreneurs and the barriers actually for the competitors to tap into the field, because you know, as VCs, we typically ask why are you unique? What's your secret sauce which protects you from competition? So what would be those barriers for in terms of financial services?
Yeah, sure. I think three main barriers, and some of them are common in every technology, some of them only specific to FinTech. Three main barriers would be regulation, and this barrier you can overcome by partnering with some banks or other financial institutions that can you can outsource the license from, or you can use every government initiative that can ease the regulatory barrier. And you wouldn't believe, but so many countries actually have regulatory sandboxes. So I don't know why people don't use it.
Mm-hmm.
Area is the cost of capital. So you basically would not solve this problem until some scale,
Mm-hmm.
and you should be prepared for it. So and that for some period you will be operating with the negative unit economics. Another barrier is the product market fit, right? So I mean, it's not the barrier; it's just maybe main business problem that has to be solved. But again, to solve this problem, I would advise to pay more attention to macro. And another barrier, which is barrier for traditional financial institutions to enter the same market. Actually, the biggest advantage of any startup is the ability to experiment, right?
Mm-hmm.
And banking institutions or brokerage businesses, they would not experiment just because of their regulatory obligations. The issuing unsecured loans with a short duration is too costly for any bank because they have to accrue many provisions. So this is why startups are more flexible in this at this stage.
Mm-hmm. Mm-hmm. Okay. Another question to you, like, if some of our listeners would like to delve deeper in those or these or those verticals, or in particular geographies, what sources would you advise? Sources of information would you advise to account for? What type of information to look for to understand better like specifics on the market?
Yeah, I mean, you probably already understood that I'm a big fan of the fundamentals. Yeah, I would to for websites of any central bank or any economic authority in the country that that publish any forecasts, history. You can also visit some professional associations websites, like Association of the Insurance Agent or Association of Mortgage Brokers. They are very popular in the United States. In terms of conference, you might visit few. There is the conference which takes place these days, which is called Blended. Actually, takes place this week. So I think on Thursday. All other sources, very common for other verticals as well, like CB Insights or TechCrunch. So a good starting point.
Yeah, and yeah, another question was you mentioned those regulatory sandboxes, and some countries adopting it faster than others. And for example, I've seen a couple of countries like in Baltics or Latin America focusing on experimenting with cryptocurrencies or maybe some other regulations. Maybe you could give the exact examples of initiatives and the countries doing it. So maybe some people listening to us will explore these regulatory opportunities for their businesses.
Well, I mean, if we look at Russia, which is I believe is more relevant to our webinar, there is a regulatory sandbox introduced by Russian Central Bank, so we can actually use one. You can go for which is the Association for FinTech website, and there is a regulatory sandbox explanation there. So they allow to launch products in a secure environment without having to comply with all the regulation.
Yeah, and when we speak about this regulation sandbox, so it sounds like it takes time to yeah, you can start a pilot doing something in the sandbox, but to become it a business, it takes time, and here you like you depend on the this regulation coming out of the sandbox. So
there is a problem of any startup. You have to attract investments in order to develop further. And with FinTech, it is especially difficult because you have to raise some money in order to prove your concept, right? And you cannot further raise money until you receive some metrics or traction. So regulatory sandbox allows you to to launch your proof of concept cheaply. So after you launch your pilot, so you have some traction. You have more chances to obtain financing from VCs.
But does it mean that this sandbox helps you get the first traction, but then you just acquire the license, like a normal license, and operate your business, or in some cases, like there is no regulation in general, so you can experiment in sandbox, but you cannot roll out it to the wide public.
No, it actually only applies to pilots. So anyway, if you want your business to grow, you have to go for the general audience, and no bank will allow that. So then you have to obtain either your license or either outsource a license from a partner. You can actually use some companies that are offering infrastructure as a service.
Okay. So I actually asked most of my questions in the question list. Maybe you have some ideas to share what I forgot to ask you today?
Yeah, I mean, I would say my biggest advice or ask for fintech entrepreneurs would be to again to pay more attention to the what is your business fundamentally. You're building challenger bank, right? And do you generate loan portfolio for that or not? So if not, how you should do that? Take more attention to macro fundamentals. What is your interest rate? What is your default rate? What is your take rate? Whatever. So that's why I mean, if you look at the fintech unicorns that evolved, they first of all they're not technology companies. They are financial institutions, and this is way how fintech companies succeed in in this race. If you look at the lending club, you might look at it as a P2P lender, but in fact it was the company that offered a very timely product of refinancing your credit card loan in a time when the interest rates were zero, right? If you look at social finance, you might look at it as a fancy online lender, but in fact it was a specialty lender that offered refinancing for a student's loan in the time when the interest rates were low. And I think, I mean, at least most of the investment banks, they do not expect that the interest rates would rise in the next 5 years. And I think these days we have a very unique situation when the interest rates, we know that interest rate will be low, and we have another cycle of low interest rates, and this allows to create many new products.
Mm-hmm.
So I think this is the perfect time to build fintech.
Mm-hmm. Mm-hmm. Okay. The last question from on my end would be, what is your call to action to those who are listening to us, especially entrepreneurs or future entrepreneurs?
Yeah, I mean, don't be afraid to explore opportunities with the with the government initiatives. Many governments, they are also keen to increase competitiveness of the financial market. And don't be afraid to speak to banks, because banks understand that they are not competitive anymore, and they actually even more keen to speak to startups than startups are speaking to them. So yeah, the major advice would be to speak to banks and explore how traditional institutions, the commercial government institutions, they are very keen are very open to new innovations.
Mm-hmm, mm-hmm. Okay, guys, maybe someone has a question to Paul, and you can write it away in the chat. We will answer them. In the meanwhile, maybe I don't know. Maybe you would like to say some closing words for today's discussion, or mention anything.
Was the question for me?
Yeah.
Yeah, I mean, the question is that when you said that the consumerization trend is actually, it's not just me who see this trend at FinTech, you also see this trend at other verticals. Can you give me a few examples, because I'm very interested in that?
Yeah, actually, we've lately looked at construction, like residential construction, sales, and logistics, for example. When actually, when you ask people why now, and the entrepreneurs are answering that, the clients are pushing forward to it. They see like Amazon Prime delivery, and they require the same level of experience from other services, or like millennials, generations, they're buying, they're purchasing something in the internet, and then when it comes to purchasing a flat, for example, and equipping it with the interior, you still need to go out to the office and do a lot of things manually, and like people are pushing forward. They're frustrated about it, and the same is with the new generation of workers coming to any type of businesses. And also, for example, in manufacturing, I've seen a couple of examples. People doing discrete manufacturing, like producing parts for automotive, printing on 3D printer something, or CNC machine. And Tesla, for example, are pushing forward their suppliers deliver quite fast. Not 5 days, not 8 days. Like give me your quotation like in 2 hours. And people are starting to lose contracts because of this pace, and it increases the requirements, and it forces the traditional industries to adopt technologies to faster process, quotes, faster deliver some results, and yeah. So that's what I see. From my perspective, in other traditional industries.
Yeah.
And what else I see is that services emerging, like people are doing marketplace, are doing SaaS business, are doing financials, and like if you start from SaaS, for example, later on you start experimenting with lead generation and payment processes. If you start from payment processes, you later on can provide lead generation and so on. So I see that the verticalization and wider spectrum of services needed to the exact client, this happens in many verticals.
Yeah, I agree. And the only issue is that building software or fintech products for businesses is much more complicated than it is for B2C space. And if you look at, I literally know very few companies that succeeded there. If you look at OneDeck, which were acquired recently by Amex, so they were acquired for 90 million USD, and this company was a unicorn someday. The same, I want to mention more companies that had not succeeded, but building financial products, especially lending one for businesses, is much more complicated because on the B2C side, you have FICA, you have very specific data points that you are building your prediction or scoring models on. And in terms of, when it comes to B2B, it's much more complicated to assess.
And actually, you have less data points because you have less of those businesses. For example, if you finance like medium companies, like giving like $5-10 million loans, it's the number of the companies in the data set is much smaller, and this makes it less reliable. While in contrast, finance and SMBs, where like they are more or less typical. Yeah, here is a question for you. Can you please name a couple of companies innovating microfinances in agriculture? Microfinancing in agriculture.
In agriculture, no. There are many companies. The agriculture financing is very limited to some specific geos. So we did not see many of those businesses evolving neither in the United States, neither in the Europe or Russia. There are many of them in India, but when it comes to India, it's noteworthy that banks in India are regulatory obligated to allocate some of their capital to those priority areas, and agriculture is one of those areas. I'm not sure which is exact percentage of the capital they should allocate, but they're definitely obligated to allocate certain portion of the capital there, and those they cannot do it on their own, and this is why there is a so-called rural, so-called agricultural banks. So they just invest in those banks, and those banks they distribute money to the farmers. So to answer your question, no, I don't know. But if I was looking for particular companies that succeeded there, I would firstly pay attention to India, because this is probably the country they should be based in.
Yeah, and a couple of words about agriculture. From my previous bank experience, I learned that financing in agriculture is really risky, because there is a weather risk. There are a lot of risks, which, are not under control of the bank or the owner of the business, and it's quite tough. And I guess this is the reason why those banks are not investing directly, while they're just allocating to the very specific banks focused on understanding those specifics of the market.
Yeah, you have to be in the field in order to understand whether this exact farmer is a good lender or not.
But also when it comes to agriculture, what I see that there is a lot of innovation happening in just tracking, like using satellite image or other types of solutions, just to tracking what's happening in the field, for example, or what's happening with the asset, and maybe making some smart decisions, whether it's financing or whether it's like day-to-day operation of the business, or whether it's insurance. And I also see a couple of companies, like, for example, a BNP Paribas bank, which are like taking some farm management solutions and providing them as a B2B2C model to their clients, just to gather the data and to get more control, more transparency of the assets for those loans. Yeah, we hope that the answer helped our guest. So I guess we are there are no other questions coming. If you have any questions, feel free to reach me out. I will ask Pavel, and he can answer them later on by email. Pavel, thanks for the call today. It was really interesting and insightful, and hope this will help those who listen to us today.
Yeah, thank you very much. And yeah, let's go to see how Asana and Palantir opened today. Interesting.
Yeah. Okay. Thank you. Bye.
Bye.